Here we go, guys, for the final time. Last video in the beginner investor series I'm going to do, and we're going to look at brokerages, which ones I use, and stock market allocation into the 11 different sectors, which I'll be honest, I have not done brilliantly, but I'll show you kind of a breakdown of what I've got, which I've not updated for a while, and I will also run you through the two brokerages I use. So this will be the final video, just in the beginner series. I'll carry on posting what stocks I'm getting into and out of, and why, and things like that in other videos, but this will be the last video in the beginner investor series. So let's go through allocation first. So the stock market has, where am I here on this one? I've got, yeah, you should be able to see this. Stock market has 11 different sectors: communication services, financials, consumer discretionary, energy, healthcare, index funds and ETFs, real estate, technology, consumer staples, industries, utilities, utilities and materials. Actually, I've added one of those. I've had one in there. I've added the index and ETF that obviously I put into as well, I think. But they're the basics. They're the industries that you want to go into. So let me run you through why you want to diversify in all these different sectors. Obviously, the index fund and ETF sector that I've added in here diversifies your will diversify your portfolio kind of for you. But the rest of them, you want to be diversifying in quite a lot. If you take financials, for example, and you've got the banks that have been massively hit by the events more recently, they're doing really badly. So if you've got all your money tied up in HSBC and Bank of America and whatnot, then you're going to be doing really badly. Your portfolio is going to be hit pretty serious, and they may stop paying dividends, and then you're in real trouble. Whereas if you look at the likes of communication services and technology, so Apple, Zoom, Skyworks Solutions, and then you've got communication services. I mean, Snap's doing well, Shopify sold out, but did really well. Netflix, Facebook, these have been doing really well. So you want to diversify across the sectors, really, just in case one group doesn't do very well. You don't want to put all your eggs in one basket, that basket being financials or energy that are performing poorly, and then your technologies and things like that are performing really well. Your consumer discretionary is probably doing less well maybe than your consumer staples. Consumer staples, everybody absolutely needs to use them. Consumer discretionary is if you've got some spare cash lying around, and if you're in a bit of a crisis, then people are less likely to utilize any company that falls in the consumer discretionary sort of sector. So you want to diversify as much as you can. I could diversify a lot more, and I haven't updated this for a while, to be honest, but you've got a pretty basic spreadsheet here of all the different sectors, the companies I'm in, and then a pie chart to see how well they're diversified. So that's the first thing to look at in terms of sort of diversifying your portfolio. Now, as I said, if you get into index funds and ETFs, it's going to do that for you pretty much. Now let's quickly look at the brokerages that I use. So I use two. One of them is for smaller amounts with no commission. That's Trading 212. In the UK, we don't have Webull, we don't have M1 Finance. We have Trading 212 is my kind of go-to. Ergonomically, it's okay. We've got some nice sort of, pie charts or whatever you would call that, circle chart, I don't know, to show you sort of where your money sits. Do you need this? Is this important? Well, no, not really. If you're buying into a stock, you know where your money is, so to display it with some fancy colours is just a little bit, you don't need it. So I'm not the biggest fan of Trading 212. The only reason I like to go into Trading 212 for my smaller account, which is the account that my fiance and I share, is because it's commission free. So if we're only putting a $5 in, $10 in here and there, whatever it might be, we're not paying crazy amounts of commission on that. My preferred brokerage, as you all know, and I'll link these down in the description below, is IG. So my share dealing account in IG, you do pay commission if you trade less than 3 times in a month. If you trade more than 3 times in a month, you know, you're investing 500 quid, you go 200 quid here, 100 quid there, and 200 quid there. You're trading 3 times in 1 month. It's commission free for US stocks. For UK stocks, you then pay £3 commission. Now I'm putting much larger sums into this, so if I'm buying a UK stock and it's going to cost me 3 quid on a £1,500 investment, it's minimal. If you're not putting lots of money into this brokerage, and you've got to put a minimum of £90 or $90 in any one transaction anyway, if you're not putting a lot of money into this, then you're going to be a lot of money you're putting in, a lot of your capital is going to be taken up in commission, which is quite a lot. It's $15 to start with. So in your first month investing in IG, you're going to pay, if you're buying US stocks, you're going to pay $45 just in commission if you trade 3 times in the first month, and then it's commission free beyond there. So it is expensive. You know, that £45 could go a long way in time, but I prefer this brokerage. Ergonomically, I like it. I like how the data you get with it. I like how it's set out. I like how easy it is to buy and sell shares. It's just very straightforward. Your tabs are up here. You've got your orders, your positions. You can add bits in to this. You can move them around. You know, there's lots you can do with this, and I much prefer this as a brokerage. So as I said, I'll link these down in the description below. If you're starting out and you haven't got a great deal of capital to be putting into the stock market, then trading 212 is the way to go, because you're not going to pay any commission. But if you've got a bit of money going into it, you know, and you might prefer trading 212, who knows, check them both out. But for me, IG is the better brokerage, and you can do demo on IG as well. So I had my Forex trading demo account is also IG, which is a spread betting account. This one here, which is up. But so you can do demo accounts as well in CFDs and spread betting accounts on IG. So you can check them all out, see how you get on with it, see how you work with it, check the ergonomics and see what you think. But IG is my go-to for stocks. Trading 212 is my smaller account for stocks because it's commission free. And do make sure you check out your allocation into the stock market and spreading it about a bit, so you've got sort of a bit of exposure in as many of these different sectors as possible. I mean, I've got nothing in materials or utilities. I think I'm not even sure if I do now. No, I don't think I do. So, you know, I've still got a bit of work to do on diversifying my portfolio as well as going into the index funds. I'm going to be doing it through IG. So last video in the beginning investment series, give it a thumbs up if you did enjoy it or got anything from this. It was just a real brief outline of how I do things, brokerages I use, and which ones I like and for what reasons. So give this video a thumbs up, give us a subscribe if you want more. You will get more, but that'll be the end of the beginner investor series. All the other videos I'll do now will be just kind of what I'm getting into and out of, news on certain stocks and bits and pieces like that. So I'll end it there. I'll catch you guys in the next video. See you later.